So I woke up this morning to another green day on natural gas. I shouldn't say another, just the second day this week, as price has been basing on the daily chart for the last several days. Uh, Price has been in a range between $2.38 and $2.13. However, on the uh, 5-minute chart, you can see prices are making higher highs and um, higher lows. All right, price has stalled a bit. Again, if you go to the daily chart, you can see these simple moving averages serving as dynamic resistance on the upper end of the range. So this is my futures platform. We're going to go to trading view so we can look at things a bit more from a macro standpoint. I guess we'll go right to, let's go to the weekly chart. So again, we can see that for the week starting off, we are bullish as price, it's only the second day of the week, price has put in a hammer candle thus far. Now, if you look at this dash yellow line, it is based on seasonality. So I had a low of 220. We did dip below that, but now we're rising very nicely. Now, why was that what I was considering the new floor? So if you go to this table here, this is coming from equityclock.com. You can see that from May to June, you have a steady rise in price, and this is over 20-year range. And then from June to about mid-July, you have a short decline of roughly 5%. When I put this line in place, I think this was a couple of weeks ago. So based on a 5 to 7% decline in price, I came up with roughly 220 as the new floor. Again, the real floor is down at $2 as the buyers have been defending this level going back to earlier this year. All right, so if we go to the daily chart, what we really need to see is price close above this 100-day moving average. If we can get a close above the $2.40 level, that would be bullish. I'd like to see a couple of closes above that 100-day simple moving average. So why do we do the analysis on natural gas? Well, this video is supposed to be about the ETF that tracks natural gas. This is called UNG, and I'm going to zoom out to the monthly chart first. Now, I had bought some leap call options on UNG about say mid May. My leap options expire in January of 2025. I brought let's just put it in. I brought the $15 calls, which would be right about here. We can see that prices did make new lows, again, according to this is coming from Capital.com's tracking of UNG. However, again, because natural gas floor is $2, the buyers are defending the $2 level. I believe that UNG has bottomed. Let's go to the weekly chart. And what we can see here on the weekly chart, let's move this RSI up. We have been making lower lows price action, but the RSI, which is a momentum indicator, has been making higher lows, which tells me that the downward momentum in price has slowed. And so hopefully what we will see is price in this accumulation phase where you have a bottoming type of pattern. Um, First test on UNG is going to be this $7.70 level. That's where the most recent pivot high is. Would love to see a close above this 13 simple weekly moving average. That would be bullish as well. Kind of like what we saw on the natural gas chart and a daily chart, price getting above the 100-day moving average. Let's go to the daily chart. So again, let's put a line in the sand of when I bought those call options. That was May 22nd. So I brought in the middle of this range right now, and because I'm buying 2 years of time, I'm still about at break even, so no sweat. Ideally, what I should look at, or I should have looked at when I did buy it, was get into some calendar spreads where I'm selling the front month, just to stall and buy some time until we get into the hotter weather that's pending. So if we go to just doing a search on Google natural gas price news, it's kind of mixed, right? Strengthening cash prices reflect the arrival of summer heat, propel natural gas futures. That was 16 hours ago. Natural gas futures trend water on wobbly forecast for cooling demand. That was a day ago. Natural gas prices forecast. Natural gas continues to slide within its range. Natural gas prices move higher on hot temp. Now we know that again, according to the seasonality, around this time of the year, prices for the last 20 years have trended up. So despite all the noise in the headlines, this is when you got to dive into the charts and use seasonality to your benefit when it comes to commodities. Let's just open up this article real quick. We're not going to get into it too much. Natural gas witnessed a marginal dip on Monday. Range-bound trading strategy. Okay, yep. Ultimately, natural gas market is currently operating within a summer range. Okay, $3 to floor, $2. So potential support, $2. This article is saying resistance at $3. Again, so let's see what we got here just to analyze it, this UNG. All right, so the immediate resistance is going to be at say $6.60. Why? You have resistance, support, resistance, resistance. So we need to break through the $6.60 level. In addition, this is where we have the moving averages converging. So yeah, we got a gap higher today. It is selling off a bit, but if we can get a close above 6.75, that would be really bullish for UNG, as it makes a run at that point to $7.78. Is this a gap? Yep, and then we also have a gap, which means that there are no sellers until we get up to the most recent pivot high. So again, I'm flat on my call options, again, because I bought roughly 2 hours or a year and a half of time. We are approaching the hotter weather in the next 2 weeks, which should put some upward pressure on natural gas, as natural gas is used for electricity, AC. So let's see how things transpire over the next couple of weeks. Thanks for watching. Subscribe, please. Like the video.